Are there still gains to be made in the next few months, or is the bull run over and we're going to enter into crypto winter? So my name is Kieran, and I highly recommend that you hit that subscribe button if you want unbiased, trustworthy news source, tutorial source for cryptocurrencies in order to earn passive income, build up your wealth, and be able to live a decentralized lifestyle. So yeah, I think the best possible strategy to do when the market is red is just stop looking at the charts, close your laptop, and think on a much larger time horizon, because that's incredibly important. Too many people, when the prices are going up, they're going like, oh, should I buy now? Should I buy now? And then after, when it drops 20%, 30%, 40%, they're like, oh, should I sell everything and maybe start living on the streets or whatever? And I think that's the most important part. You have to have the correct time horizon. If you're like buying your $1,000 worth of ETH or Cardano, blah, 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 at the all-time high, and then you're panicking when it drops 30%, and you're thinking about selling, well, think about the first reason why you actually entered into the market. And if it's just because you want to get quick rich, then this is definitely the wrong place to get into the market, because relying on your emotions, buying high, selling low is not the best trading strategy, and you don't have to be like a PhD graduate to realize that. So if we look at the current global cryptocurrency charts, I think the first thing is clear, and that is timing the markets beats timing the markets. What do I mean by that? Well, basically, for most blue chip cryptocurrencies, if you bought any time like in 2017, 2018, even at the peak of 2017, 2018 for the altcoins, you'd be in profit. Now, of course, not with all cryptocurrencies, but most of the blue chips like Cardano, ETH, they're all way higher than the 2017, 18 highs. And basically all of this noise that has been happening along the way, most hodlers are in profit. Now, of course, that doesn't mean that you should just be like putting all of your money into the market and believe in 10 years it's going to be safe and you're going to be like in profit. Like with everything, just put as much as you're willing to lose or that you're willing to risk. Now, of course, I definitely don't want to lose my whole portfolio, but I've been accumulating for a very long time. I've got a hodl position that I never touch, and just leave it in the market and just ignore the noise of the price going up and down. And when the market is really, really bearish as it has been, I mean, the price could even drop further. BTC could go to 20K. I'm definitely not a great trader or anything like that. Me, I'm a very good hodler and ignoring all the noise of the market, because I am indeed very interested in the tech behind the whole cryptocurrency innovation. So the prices are definitely interesting. I definitely want to have a good investment, but I am definitely focused on the tech, on the use cases. That's why I'm making a lot of videos in the DeFi space. So now imagine you're a person that bought maybe at a peak. So if we look at 1 year, there's been many different peaks. You've got one peak here on the, what was that? The 10th of January, 2021. Market cap of $1 trillion US. Now, of course, afterwards you had a crash, and then some people sold the low. Some people definitely bought the high. But if you hodled and you waited, another peak, and here at 1.7 trillion US dollars, another peak at 1.8. Point is, the longer you're in the market, and if you dollar cost average, meaning you just buy every week a little bit, and you just like think of it long term, think of it as in 5 years and 10 years. I mean, in the end, does it really matter? Like back in 2018 or 2019 was when Bitcoin was between 6,000 and 8,000 and 10,000. Did it really matter if you bought at 8,000 or 9,000 or 10,000? In the long run, the gains were more or less similar. I mean, maybe a few percentage off or maybe 1 or 2 weeks less, but it's still crazy gains. So by basically accumulating constantly a little bit and not just going all in. Like if you go all in here, this is going to be a very, very bad weekend for you, because you've had like 30% loss in one day or one weekend. So one opportunity for you would be maybe buy the dip, and then you have a much lower buying price. So that's one way to do it. Now, of course, if you went all in here, you don't really have any cash left to buy back, and that's a bit of an issue. Now, if you actually always buy a little bit, you might buy at a low, you might buy at a peak, but in the end, if you actually always do it like this, at some point, you're going to have an average buying price of maybe at this line here. Now, of course, now I'm looking at the total cryptocurrency market, and it really depends on what coins you're buying, but this is to give you a bit of a gist. So this is one strategy. Now, of course, at some point you should stop buying, and then maybe think about selling when we're reaching like the euphoria stage. Because yeah, the market, like everything, doesn't always go up. At some point it goes down. So if you combine this buying with a selling strategy, so then maybe at the peaks, instead of buying, you're like selling a little bit here, selling a little bit here, selling a little bit here, you definitely won't have as much fear and uncertainty when the market decides to take a plunge, because that's basically what happens. The markets will move. The markets are still relatively small. That means a lot of manipulation can happen in the markets, and weak people, because they're being led by their emotions, will sell the lows. And they're probably people that bought the highs and sell the lows. They go out of the market, they're frustrated and so on. But most of you guys, since you're following this channel, and if you're not, I do highly recommend that you subscribe, are pretty smart. I believe you guys are pretty smart, and you are people that actually started accumulating back here. And even if you actually started accumulating, I'm pretty sure you've been dollar cost averaging and listening to what I've been saying in my videos. Dollar cost averaging in and out is like the what is it? Like the Sunday topping, everything really beautiful. It's perfect. The perfect way to do it, because you're gonna have guaranteed profit if you just follow your strategy. So if we go back to what is happening at the moment with the markets, am I worried? In the long term, I'm not worried. In the short term, I mean, it's not fun if the market drops 30%, 40%. Am I going to do anything about it? Nope. I'm not selling because the market is doing something. Like, I'm not reactive in the sense, if the market is dropping, I'm just going to like sell and then try and hope and catch a cheaper price. I do trade with a little bit of my position, but that's like fun money and not really a serious part of my whole cryptocurrency portfolio. So basically, even though I feel like the market is not that great in the moment, and I'm kind of hoping, I'm definitely bullish on the whole cryptocurrency space and everything that's happening in the market, and the DeFi space evolving. There are a lot of great upgrades. The fundamentals are super strong. The institutions are coming in. I mean, even a lot of things that are happening that just defeats all of the FUD that is around. So in my opinion, after reading the FUD that has been around, the most important FUD was like the Bitcoin getting hacked by the FBI. I mean, like just a really crap article. No one can steal your Bitcoin as long as you've got your private keys. I mean, no one. I mean, if they could do that, Bitcoin would lose 99% of its value in the matter of a few hours. So the only way that the FBI could take the Bitcoin is because they had the private key. So it's basically saying a safe is not safe because the key is inside of it. So that's pointless fear. But many people don't really understand that. And MicroStrategy can't get liquidated or forced to sell BTC. That's also a big FUD point. And then the other one, and this is not FUD, but this is great, is that Bitcoin is legal tender in a country. And I think this is a huge deal for emerging markets, important for developed countries is important, and first world countries. This is really important because it just shows behind the scenes a lot of adoption is happening. But you're going to have to realize that with this adoption, a lot more players want to get into the market. And these players, they don't want to buy at the all-time high. So what do? They create a lot of FUD. They pay news articles to post the same articles over and over again. And they by bots to upvote articles on Reddit and on Twitter and so on, to create this narrative that everything is going to zero. And when you actually see the prices going down, your emotions start going up to another level, and then you see all the articles everyone is saying it's going to zero, there's going to be death cross, blah, 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 blah. Well, all of this is actually playing into their game. They want you to sell at these prices where it's super low. They want you to sell here. And they're going to fill their bags with Bitcoin, with ETH, with Cardano at these low levels because they're very bullish in the future. So this is nothing new with other markets. If a big player actually wants to buy, he's going to find a way to buy the assets at a cheaper price. And the cryptocurrency market is still relatively small compared to the derivatives market, compared to the stock market and so on. So in the end, since it's so small, it's very easy to manipulate. But I want you to be smart. I want you to really be smart and not be manipulated out of your cryptocurrencies. If you sell because of FUD from the FBI, if you sell because of FUD, because you believe MicroStrategy or whatever kind of FUD comes your way, well, I'm sorry to break your bubble, but you won't be rich. You won't have wealth. I mean, seriously, if you cannot look at the technology in an unbiased way and think about what this could mean for the future, and if you're bullish on all of that, then all of this FUD is really worthless. You shouldn't really pay attention to it. Just make sure you have an exit strategy at some point to sell a portion of your portfolio in order to have liquidity during the next bear market. That's something that's going to be that is something that has to be on your agenda. Otherwise, you're going to get wrecked in the next bear market. And most people are going to get wrecked in the bear market, because when I talk about taking profit, it goes in one ear, goes another for most viewers. So if you're one of those 2 or 3% of the people that actually have an exit strategy in mind, well, you and my friend are going to be very, very wealthy. So Cardano at $1.54. I'm not bearish, but of course I have to say I did start accumulating back when it was like 4 cents, 5 cents, and so on. But there were many instances where it went up to 33 cents and then it dropped down to 28 cents or even lower, 27. Or it actually went up to $1.32 and dropped all the way down to $1. And I just kept holding on and accumulating along the way. Now I've got the advantage that I got in really early. And yeah, that's about it. Yeah, but I would probably still be buying at the $1.20 range. And at some point, I'd be thinking maybe about exiting a little bit of my position. But that's just to show it. Me personally, I managed to get into something pretty early. And yeah, but everyone has a beginning one day. And you're going to have to think about it long term. Me, I'm thinking about it in 5 years, 10 years. What is it going to achieve? Is it going to be worth a lot more? If the answer is yes, then I'm still hodling. So I'm still hodling at these prices. The same with ETH. ETH has also had a fantastic rally. The use case is the same, but combined with a lot of speculation, it can push the prices massively higher. So yeah, just if you were one of the persons that bought at $4,297, then maybe think about dollar cost averaging. So what about the death cross? Many people have been talking about the possibility that Bitcoin is going to have a death cross, and that happened on an occasion, on actually 2 occasions back in 2014 and back in 2018, and that actually led to a massive crypto winter. Now, I don't have oracle. I cannot predict what's going to happen in the future, but yeah, I mean, the price could drop. The price of Bitcoin could drop. I'm personally not as bullish on Bitcoin as I am with many of the other altcoins that I'm hodling, for one reason, and that is Bitcoin has one use case, and ETH, Cardano, and so on can actually serve the purpose of many different use cases, being actually the foundation of a massive economy built upon it. The decentralized finance space, but also like insurances, tokenization of assets and stuff like that. So a lot more use cases. I'm a lot more bullish on Ethereum, Cardano, Polkadot, and so on. And I believe the dominance for Bitcoin is going to massively drop in the next few years because of this narrative. So I'm not too bearish on the cryptocurrency space. It's possible it drops even more. We're going to have to find out. But like I just mentioned before, I've got a very long time horizon. I don't need the money right now. And if you're in the same shoes as me, then I'd recommend doing the same thing. But only if you're following the same dollar cost average strategy and also the dollar cost out strategy to make sure you've got liquidity back in the bear market. So I'm not bearish. Another thing, and that actually ties back into my narrative at the beginning, that all of this FUD is very likely due to massive whales wanting to accumulate at lower prices. I mean, they've got the funds to pay for articles to be published, to buy bots, to upvote those articles on Twitter, on Reddit, and so on. And to create this narrative that everything is going down the hole, down the drain, everything is going to zero. And the best way to analyze what is actually happening is looking at on-chain data, meaning what is actually happening on the blockchain, because this is something you cannot fake. If someone is saying, hey, this is really bad, it's going to zero, but at the same time, they're actually buying what they're saying is really bad, well, maybe if you put one and one together, that actually shows that they might think that what they're saying is bad is actually good. And that's what the sentiment platform actually posted about. And that is Bitcoin whale addresses holding 1,000 plus BTC, and that's a lot of money, are back to holding 7.88 million coins. This is the largest amount of BTC held by whales since March 14. This coincides with just 2.65 million BTC held by addresses with 10 or less BTC, the smallest amount in 6 months. What that means is that Bitcoin, as well as probably other cryptocurrencies, are shifting sides. They're going from those weak hand small traders that believe the FUD, they're being manipulated out of their Bitcoin, out of their ETH and so on. And these cryptocurrencies are moving towards massive whales that understand the markets, understand that when the market is fearful, you should be greedy. That actually brings us to another point, and that is the greed and fear, crypto fear and greed index. And I think this is one of the best tools to use to realize when you should actually be greedy, because basically you should do the opposite of what is on this chart. When people are greedy, you should be fearful. When you've got Shiba Inu, Dogecoin, and blah, blah, blah happening, you should already have your dollar cost average exit strategy in place and be selling those green candles. And when the fear and greed index is painting like a blood red fear, like it's at the moment, then you should be greedy and start accumulating cryptocurrency if that's part of your strategy. But at the moment, the crypto fear and greed index is very low. It's very comparable to back in March 17th of March 2020, when the massive drop happened last year. Many people afterwards were like, oh, that's a great time to buy, really great time to buy. But actually having the gut to press on buy and buy some cryptocurrencies when the whole market is fearful is very difficult. So that's basically it. There's not much to say about this, and that is just buy when the market is fearful and sell when the market is greedy. So always keep an eye upon this, and yeah, I'm pretty sure you'll be successful just by looking at this and doing the opposite of what the market sentiment is. Now, talking about fundamentals, I mean, think about it like this. From being a magic internet money that has been despised, been attacked by banks and institutions, whoever you may ask, over the last few years, to becoming a currency in a country, I mean, that's mind-blowing. And thinking about this massive strong fundamentals and thinking about selling just don't make any sense. So the Bitcoin law has been approved by a supermajority in the Salvadoran Congress, 62 out of 84 votes. And I think this is really bullish and also very good, thing for developing countries, because they can actually take part of this global economy, get rid of massive hyperinflation, and maybe even gain a lot of advantage compared to first world countries that are still fighting about with regulation and so on. United States. So this is crazy. So yeah, definitely don't trade your entire portfolio based on FUD. If you want to trade a little bit, maybe only a few percentages, that might make you feel a bit better, but basically dollar cost average. The whales, they monetize on fear. They only make a lot of money when the market is fearful, and when the market is greedy, they're going to be exiting the market. So a lot of institutions are coming in, they want to buy, they're definitely buying at the moment with the market being so low. So if we look at the stock to flow index, this is really bullish, it's still really great, and also paints here a moment of a good entry point. We've had that many times in the past when the market is basically below this blue line, which is this stock to flow prediction. It's a good time to enter, and when the price is above this blue line, it's basically a good time to exit a little bit out of your position. So at the moment we're on track. We're at 70, we're now I think at 33,000, and basically with the stock to flow model, it would mean in September 22nd of September, we should be around $104,000 based on the stock to flow model. And I think that's pretty realistic. And yeah, it definitely would suck if you sell at the lows and then miss out on this opportunity. So really awesome. I believe before this happens, BTC going to 100K, we're still going to see a massive push in the altcoin space, another rally. And that is by comparing the current year 2021 with 2017. So basically we had one push above, and this is the Bitcoin dominance. And I believe it's possible that we reach either the 2017 highs of 72%, but it's even also higher likely that we go above that 85%, tying back again into the narrative that the altcoin space is going to be massively over dominate the Bitcoin dominance because it has a lot more use cases. To recap everything, there are more and more use cases in the cryptocurrency space. I mean, in the DeFi sector, you've got, first of all, you've got the foundation layer, you've got Ethereum, you've got the Polygon sidechain, you've got Binance Smart Chain, you've got Cardano that is building the DeFi space soon in August. All of that is very bullish, but that doesn't actually reflect in the price right away. This is something that's going to be reflected in the price 4 months, 5 months, 10 months from now, 2 years from now. So by accumulating a bit, you're going to be able to participate in this massive market. Institutional interest has been at all-time highs with whales and institutions coming back into the market at those low prices. And you have to think about that. Visa, MasterCard, PayPal, they're hiring a lot of new developers to create new stuff on the blockchain technology. And if they're doing that, then it means that there is a lot of potential behind it. So there's also a lot of inflation coming, especially in the US, but also in Europe. The euro is very weak. The US dollar is very weak with a lot of printing. Basically, it's a crazy shitcoin with unlimited supply. And yeah, who would want to buy a shitcoin with unlimited supply? And you basically should ask that to those that are selling into fiat. Why do they actually want to hold fiat? Maybe they believe they can buy back at lower prices, but yeah, timing the market is very difficult. So you definitely have to decide for yourself if you want to buy or sell at these prices. Me personally, I'll be hodling. I do not endorse all the fear mongering that's been happening on YouTube. All of the YouTubers like scaring people that the dump might happen to 20,000. I mean, it's possible that it can happen, but you're better off not listening to that. Shutting it off your computer, not looking at charts is definitely a better way to live through this crash, as you might call it. So yeah, I hope you enjoyed this video. I'll catch you in the next one. Have a good one. Bye-bye.